Everything in this video is for general information and educational purposes only. Nothing presented constitutes financial product advice, personal advice, or a recommendation to acquire or deal in any financial products. Any examples are illustrative only and should not be relied upon as indicators of future performance, as past performance is not a reliable indicator of future performance.
Today, we're going to be going through the easiest trade setup that you're ever going to learn. So this is one that just repeats over and over. It is a price action setup that you can find on all time frames. So let's get into it. So this setup's ingredients are as follows. So we're going to be looking at the higher time frame prevailing trend. So making sure that we are trading in the correct direction. We're taking a look at order blocks, what imbalances are, then looking for local structure shift within that market structure. And then of course comes the retest of the imbalance order block, which we'll take the entry at. So the first thing is market structure, making sure that the high time frame prevailing trend is going in our favor. So for example, a trade being executed off a 12-hour time frame, we want to see the daily and weekly trend in our favor. So in this case, we can see with this trend, we have a high high, a higher low, high high, higher low, higher high. So we can anticipate the price will be putting in a higher low while this trend is still intact. Once we've established the trend is intact, we are patiently waiting for a setup to form another higher low. We're not interested in buying high, so it's important to keep an eye on these higher time frames to look for more discounted price before looking for a trade setup. So we don't want to be buying all the way up here, all the way up here. We want to be seeing a significant pullback before we look to participate into the next move higher. So we have a full course called MM3, which we teach other forms of analysis that can give you points of interest to pay attention to when price comes down to those areas. So instead of just randomly looking for this setup we'll be learning today, we do have a more comprehensive course that teaches you how to be spotting exact areas that we're waiting for price to get there before we're using this setup that we're going into. The next step is now to drop down to a 12-hour time frame. So obviously, if you're on a 1 day, you can drop down to a 4 hour or something like that. But this is just for an example's sake. We're saying weekly. This would be basically just a crude drawing of like a 12-hour time frame if you were to drop down looking at that trend structure. Once price has found its way down into a discount from the previous 12-hour leg up, we want to be looking for a trade setup. So what I've done here is you can see over this area here, we've got this pink 0.5, and that's been pulled from the bottom of this low to the top of this high. So I like to be taking trades from discount. I have a rule set that I won't be taking any trades in the premium, and that way I'm not going to be caught off guard if this thing does sell off. So the 50% measurement is basically just a conservative pullback area. There'll be times it'll go to the 75%, which we call deep discount. Other times it won't even come back to the 50% if it's strong enough, it will move higher. So this is basically just giving us a general idea. We want to be taking good high quality trades and basically, staying out of areas that we could get stopped out all the time. I generally like to see is coming back down to 50% or below to be looking for this trade setup. So once we've confirmed that the high time frame prevailing trend is moving in our favor, we want to be looking at an order block. So an order block is simply the last candle or candles in a down leg before price turns around. These are people who sold right into the deepest part of discount of an internal downtrend. The way they work is traders who sold will want to get back in, and if the market is strong enough, price won't fully cross the block as to make these traders chase higher, leading to higher prices. Order blocks can also be divided up into discount and premiums, as lower time frame traders will also be playing with inside of these scalping. Ideally, we want to see strength come out of premium. So those who sold in discount has to buy higher, outweighing any supply, so sellers above. So going back over this, we've got this last down candle, which has created this order block. We've used this body in here. We've split it up into the 4 sections so that the 50% is this middle area. We've obviously got the deep premium, then the discount and the deep discount. So in this case, we don't want to see price coming back down into this area. Ideally, we want to see strength here. Why is that? Because these people who sold in here, they're going to want to get back in somewhere about where they sold out. So the idea is when price comes up and back out of this area, as soon as it taps into the top of this, people in here are basically buying straight back in, and those who are in the know about this order block are also going to be taking advantage of these people who are now in pain, who are now offside and realize that they've made a mistake. This is what pushes price higher, and as price pushes higher, the people in this area down here, they have to buy higher. So they're adding extra buy pressure, and obviously we have sellers exhausted as price couldn't go any lower. So no sellers and a lot more buyers means prices go higher. Although we're looking for order blocks in the absolute lows, order blocks will appear all over the chart. When price is trending after a good entry, we can monitor where sellers who took profit made a lower time frame pullback. We want the higher time frame them to push higher and use these blocks as support for the new leg up to remain intact. So even though we're not looking at the absolute bottom, you could already be in a trade, for example, but you can still see where it's sold off and price push higher again. It comes back down. It does respect that area where people sold off as a internal order block within inside it. So this is also just a little bit of a lesson on order blocks within inside price action, but you can see that they will be appearing everywhere. So we obviously always want to just be looking for the order blocks that actually matter. And they're obviously going to be the ones where this setup is basically going in. So how to draw them? I'll generally draw the entire range of the down candle. That means the top and bottom wick is included. In case of strong demand, I'm not front running, but waiting for the body to be touched. However, ideally, we want to see body touches as on a lower time frame. That is where most of the lower time frame ranging took place. So we zoomed in on an order block. So this was, on the 4 hour, for instance, and we went down to the 15-minute. In that area of that 4 hours, there'd be a lot more candles making up that area inside the order block than it would be inside of the wicks. So there will be times where it is strong that it will just touch the wick and go. But ideally, getting a body touch is generally more likely that we're actually going to be, hitting a lot more people that were actually participating, and we're going to get a more clear confirmation if it goes through or if it actually pushes off that level. So a general rule of thumb, if the candle is made up of mostly body, use the body. Conversely, if it's a doji-like candle, which is not a lot of body and more wick, we'll use the full range, as the lower time frame is more likely to have strong demand that pushed above the doji, meaning more positions to defend their premium positions. So there will be times if you do see a candle and it's made up of a little amount of body, we can use this entire range because we are likely just to sort of bounce out of that area and not actually come back down to the body. Whereas if it's a full body and there's only some small wicks either side of it, this is generally where I'm just going to use the body and pretty much ignore these areas where they're just on a slower time frame. It would look basically like where we've just got these little deviations above and roll back down with little deviations below. So I'm looking for more of the entire range compared to this, where we would have had a lot more of a just general push, leaving what we'll be moving on to next, which is imbalances. So that's order blocks. So now we'll move on to imbalances. An imbalance is made up of 3 candles. The first candle's range, a second candle that should be a strong thrust candle, and a confirmation third candle. The imbalance is the space of the second candle that is not overlapped by candle 1's range or candle 3's range, leaving an area where only one strong part of the candle doesn't have any overlap either side. So if we go through that, we can see that we have this first candle here with its entire range, this top wick all the way down. This second candle here where it's thrusted, it's pushed very strong. And then we've got this third candle here. Now, the reason for the third candle is we want to see it needs to close into the fourth candle before we can confirm. So you can see that this candle's range, we see the body that remains in here isn't overlapped from this candle and isn't overlapped from this candle here. So that's called an imbalance or a fair value gap through that area there. So this shows strong buying participation and a lack of selling pressure. This is a key ingredient when it comes to showing a potential bottom is forming at our area of interest. Now we'll move on to a very important part that people miss out on this setup, which is the local structure shift. Before we get trigger happy, we want to see a previous local lower high swept or traded above before the setup becomes confirmed to execute from. An order block and imbalance alone is not enough of a confirmation to take a trade from. We want to see the buying strength able to touch a local lower high. This shows us that the previous buying in this lower high is mitigated and there are still buyers willing to push higher. Using the same example, we can see price traded above the recent lower high. So we're looking at this locally, and we'll see this lower low. We can see this lower high through here, and price is pushed up. So generally, where these people were buying in here, what would happen is if the sellers were still strong, and these people also bought in here who want to get out at break even, when they do start to get out, through this area here. So we were basically to look at this like an order block. A lot of these people want to get out, but there was enough buyers stepping in to let them out and continue price higher. So this is saying sellers are exhausted. This is also saying that buyers are willing now to step in and try and push prices higher. So this is the shift that we're looking for, this previous low high, just to say the buyers are here and they are serious. Whereas if it just came up to here, you might say, I've got the order block, I've got the FVG, but if it just rejects immediately before taking out this high, there's a high chance that this low is now in danger because it can roll over again. So we need to have that ingredient to make sure that there's people potentially wanting to push prices higher. So a shift can just be this wick and it can roll back over from there, not as strong. But when we definitely get some candles trading above this area for a significant amount of time, then we can definitely say this is a much stronger setup now that it's showing buying is stepping in this area. So now the retest of the imbalance order block entry. When we put all the ingredients together, the higher time frame trend, which we just went through, order block, which we've got marked down through here using the body, an imbalance, which was this area, these 3 candles through here, where we've got that space in between, showing that we had that thrust and that strong intention of buying, the shift of condition getting above this previous lower high, where there was lots of people who obviously wanted to get out, and they did, but price continued to remain higher. We're able to execute a setup that repeats over and over with a controlled invalidation point and stop loss. So the trade trigger was this order block off through this area here, and then we have the invalidation, which is the stop loss right below this low if we're wrong. To make this setup even stronger, we can look for higher time frame levels such as order blocks from previous price action to the left, and other types of key levels we would like to see a sweep or a swing failure pattern. In our MM3 course, we go into how to identify levels we want to see this setup occur off, as well as then watching these setups turn into Morningstar reversal patterns of stepping up to higher time frames. But to keep it simple today and digestible, just start with searching for these setups and how they play out. So on Bitcoin, I'm just on the monthly here, and you can see how we have this price structure of this high, low, high, low, high. So we can obviously see that we're in this uptrend, and if we just drop back to 1 week now, we can go and have a little bit of a look for where there would have been, some potential trade setups, even on like the weekly, for instance. So there's one that was down through here that I can see, and that is if we have this order block that's drawn in from this low down through here, we had a fair value gap, which is between these 3 candles through here, and we also had that shift of condition from this point through here. So the shift of condition, the fair value gap imbalance, the order block, taking the entry straight off it and pushed even higher. So it's as simple as just going through each time and just identifying this over and over across different time frames and just making sure that we're going along with the prevailing trend. And trading can be really that simple. Now, if you're having a look at the moment, you're thinking to yourself how these boxes highlighted, our indicator developer, Slimy Green, has actually put together a what's called the simple OB. So it doesn't pick up all of the order blocks, but it is a really, really good general guideline to help identify them. So when you are looking for these types of setups, you're not having to go through every single candle trying to identify it. It's already showing you, and it drags your eyes to that area. And then from that area, we can actually watch for the setup. So if you do want to use that indicator, just go to your indicators and look up Market Master's simple OBs and apply it to your chart. So there it is. That is a trade setup that repeats over and over on different time frames that you can use just by being a little bit patient, waiting for the price to be in the right area. Then we're just simply waiting for that order block, that imbalance, that shift of condition. Then we've got really, really clean area, whether we enter in the imbalance, we enter off the order block with a stop below the low, and it can be a great way to increase your strike rate and remain profitable. Thanks for watching, guys.